We're going to be looking at the requirements of quality management in this video. The objective is to understand what the requirements are so that you can apply them to a AAA exam question. We will be evaluating the application of these standards through some examples, but a question debrief of a past exam is going to be done in a separate video. Let's have a quick look at the standards that the examiner expects you to apply to AAA exam questions. So we have ISQM 1. You do not need to know the name at all, but just understand that this applies to the firm as a whole. This means that whatever engagements the firm is offering, be it external audit or other engagements like due diligence, assurance on prospective financial information, etc., all of these are basically coming under the umbrella of ISQM 1. This standard requires the firms to have systems of quality management in place. And that's just simply a fancy way of saying that they need to have policies, procedures, and systems in place to make sure that all engagements are carried out properly based on whatever standards apply to those engagements. We then have ISA 220, which is specific to external or statutory audit. So it applies to external audit only, and it outlines the requirements and the responsibilities of the engagement partner who's going to be signing the auditor's report. And it says pretty much exactly the same things as ISQM 1. We know, and I'm just going to repeat this, in AAA, you do not get any marks for quoting standard names or numbers. So just an understanding of the contents of these standards is what is needed for advanced auditor assurance. Instead of just talking about the elements of ISQM 1 theoretically, we are going to be looking at how they can be applied to AAA questions. So the first element of ISQM 1 or a requirement of ISQM 1 is governance and leadership. The idea is that within the organization, within the firm, there should be a culture that prioritizes audit quality over commercial pressures. So it says audit quality here, but we could potentially be talking about any engagement. So this could be audit or engagement quality over commercial pressure. So you're not going to end up accepting clients simply because they're paying you a lot of money. Now, in a AAA question, you're basically looking for any indication that the senior management, which could be the partners or the firm's managing partner on the firm's CAO, is not prioritizing audit quality. So one partner could be looking after too many listed clients. Maybe there's a lot of pressure to start earning profit from their engagements, because of which quality could be compromised. Maybe engagements are being rushed to meet deadlines. Again, we are compromising on the culture that quality comes above everything else. Or there's a tone that whatever tasks you have, you need to get it done quickly. So this is primarily linked to the tone that is set at the top, but within the firm. Please understand, quality management as a topic is entirely from the practitioner's or the firm's perspective. The second requirement is nice and simple. So firms must follow the relevant ethical guidelines, and this basically means in the AAA exam, you are going to be evaluating ethical issues based on ISA's Code of Ethics. You will also be looking at local ethical standards in practical life. But as far as AAA is concerned, we're just making sure that the fundamental principles are being complied with. So you're going to read the scenario. If there's any indication that ethical issues were not safeguarded or managed properly, that's going to become a quality management deficiency. The third requirement of the standard is acceptance and continuance considerations, that the firm should only be accepting or continuing with clients where they have the relevant skills, knowledge, experience, etc., and where they have managed risk. So it's not just about the resources, it's also about the risk related to accepting or continuing with that client. Now, in terms of AAA questions, you would have separately covered considerations for accepting new engagements, etc. You're going to be applying all of that to that exam question. So look for any indication that high-risk clients are accepted. For example, where the management lacks integrity and you still accepted that client. maybe customer due diligence was not carried out. The company was already struggling in terms of money and finances, and you still went ahead and accepted that client, or maybe you do not have expertise in that particular industry. So these are just examples, remember, that you should be alert for or alert to as you are going through the exam questions. We then have resources, quite frequently tested. We need to make sure that we have enough resources available to carry out the engagement. This includes competence, this includes people, so available staff, time, technology, and experts where needed. So you're basically testing whether such people are available and such resources are available. So it's not just about time and people, it's also about potentially any technological resources. So again, if because of lack of resources, you're allocating junior staff to complex areas, quality is going to be compromised. You needed a consultant or an expert for a certain complex area, but they weren't appointed because they weren't available or because they cost too much, quality compromised. In group audits, if component auditors were weak and we didn't really check their work because we didn't have the resources, etc., all of these are examples that you should be alert to. We then have the actual engagement performance, and quite a few things are covered under this. So this is things like you have to make sure that from the start, from the planning stage, the entire engagement is carried out properly. So we have direction set at the start of the audit. We have ongoing supervision in external audit. We have hierarchical reviews. We have review by the engagement partner. We have engagement quality reviews, all of that. So all of this is covered under engagement performance. So within the AAA question, you're basically testing that the engagement was executed properly. I keep giving examples from external audit, but please understand this applies to all engagements that the firms are offering. So like I said earlier, direction, supervision, review, did you apply skepticism and judgment? All of that is going to be tested. Now, within the AAA exam questions, look for any indication that the partner or the senior managers were absent. So there was no ongoing supervision. The juniors and the seniors were dealing with the problems on their own. Their work was not reviewed. Two juniors were asked to check each other's work. Because there wasn't a lot of money or the fee wasn't that much or we had budget constraints, then because of that, we rushed through the work, etc., etc. Effectively, this is a very easy way for the AAA examining team to test the entire syllabus. So across the external audit process in particular, if any auditing standard was not sort of applied properly, that becomes my quality management deficiency. So materiality was set at the planning stage but not reviewed. Samples were taken on the basis of judgment rather than statistical sampling. Or new risks were found but the audit plan was not changed. Or the audit plan was changed but without any reason, etc., etc. So this is a very good way for the examiner to test the entire syllabus. We then have a few other elements. So we have information and communication, and this is again within the firm regarding quality management. The goal over here is quite simple. We need to make sure as the firm that everyone understands their responsibilities and quality problems do not stay hidden. This is all we really mean by information and communication. With risk assessment processes, this really comes at the start, but one of the generic ones. The firm should identify where the quality risks are and manage them proactively. So which clients could potentially have such problems and try and put in safeguards in advance. And monitoring and remediation simply means that any problems that are found, they must be communicated to appropriate people so that actions could be taken. So with monitoring, it could be internal monitoring. It could, of course, be monitoring of the quality of work by the regulators. So in the AAA exam questions, for example, if there was any indication that issues found in work quality were not escalated to senior people within the firm, or whatever quality deficiencies were identified, they were not communicated, that would be a problem. If there were no internal inspections, so we're talking about review of completed projects or completed assignments potentially, where someone from the firm is going to come and check to make sure that the engagement was carried out properly. We could also be talking about reviews or quality reviews before the engagement reports are signed. Maybe in the past there were quality problems identified, but no actions were taken, and no one tried to find out why quality was being compromised, etc., etc. So with the elements of quality management, and there are 8 of them, you don't need to worry about explaining them for 5, 6 sentences. We just need to understand what they are so that they can be applied to an exam question. We then have ISQM 2, which only focuses on engagement quality reviews. This is often abbreviated as EQR. Remember, an engagement quality review is always done by someone other than the audit team. So in the audit team, we have the engagement partners, we have the managers, we have the supervisors, we have seniors and juniors. The engagement quality reviewer has to be something completely different. So that has to be a completely different person. This standard identifies when such reviews are needed. They are required or mandatory for listed companies. Firms could have their own policies, or your local laws and regulations could basically tell you which engagements must get a quality control review done. The purpose is that we need someone other than the engagement team to come and evaluate whether the work was done properly. The requirements of this standard are the reviewer must be independent and competent. We'll talk about this in just a few minutes again. They're going to evaluate significant judgments and conclusions. So they're not looking at all the work in detail, but focusing on major judgments and conclusions. Very important, the engagement quality review must be completed before the audit report is signed. So the partner cannot sign the auditor's report until the quality review has been completed. And the review itself needs to be documented. So you have to make sure that the quality control reviewer documents whatever the findings were. There are a few other requirements. Some of them are being repeated. There is a cooling off period. So if a partner, an engagement partner who had been signing audit reports, now wants to stop being a partner and they don't want to come back ever again, but want to shift to being an engagement quality reviewer, there should be a gap of 2 years. This person needs to have competence, capabilities, time, and authority. So it's not just about being professionally qualified. You need to have relevant experience of that industry. They should not be in a rush. They should have proper time, and they should be senior enough to challenge the partner and the rest of the team. Very important misconception. This review is not just done at the completion stage. It needs to be done throughout the engagement. The quality reviewer is going to evaluate whether the audit team applied professional skepticism throughout the audit. And like I said earlier, the partner cannot take the auditor's report until this EQR is finished. The review is finished. So these are the requirements of ISQM. We then have ISA 220. I'm not going to be talking about this at all in detail because it covers exactly the same things that we've discussed just now, with just an extra thing that I want to talk about, which is documentation. We've known this from AA. We're just revising this. In audit, if it's not documented, then for me, it really didn't happen. So the engagement partner has to make sure that the significant judgments and conclusions are properly documented, and this includes the review process. So in quality management questions, if you have any indication that there were verbal discussions with the management and other people but weren't documented, of course, that's going to be a problem. Maybe audit work was done, but it's not there in the working papers. The reasoning for judgments in the audit of estimates was not documented. There was a lot of reliance on written representations with no corroborative evidence being documented, etc. So the idea is basically, if you've done any work, it needs to be there in your working papers. So be alert that sometimes it could just really be a lack of documentation rather than work not being done. Let's have a look at some examples. All of these are not from the past exams. This is more application of what we've learned. The idea in the AAA exam is you'll have to identify where quality has been compromised. So let me just write that down. By using information from the scenario or the exam question, and then you have to explain the impact or consequence on audit or that engagement. So this is where my technical and my professional skills marks are going to be. I'm not going to be going through all of these examples in detail, just like a quick talk through of each of them. Of course, you can pause the video at each slide and read through them if you want. So in the first one, this was given in the scenario, the partner did not hold a team briefing meeting at the start of the engagement to communicate ethical requirements and professional skepticism need, etc. So they did not reinforce the behavior that was expected of the entire engagement team. And why is that an issue? I can't simply write, oh, because quality has been compromised. I'll have to explain the consequence of doing that. So as a result of this, the team may fail to challenge management because they don't know how to apply professional skepticism, and this could increase the risk of material misstatements being undetected. So another one, results of internal quality inspections identified that work is not documented properly and shared with the other teams so that remedial action could be taken. So I know they're doing their work, very well done, but there's a major lack of documentation of whatever work was done. So I picked that up from the scenario, but the impact of this on quality is that if this persists, a recurring issue, then ultimately I could end up facing consequences later on if the regulators identify this in their review. Honestly, later on in a negligence lawsuit, I would have nothing to prove that I've done my work. So you could explain it any way you want. In another example, they had carried out acceptance procedures, but they were not done properly or they were not documented. And because this was not done properly or documented, the firm might have accepted high-risk clients where competence or integrity of the management was not evaluated. And if it's a firm level issue, then this is going to be a bigger risk across all engagements. In another example, key audit areas were completed remotely with limited evidence of partner review. Now, doing this or completing this review remotely is not as big as a problem as the fact that the partner did not review the work done. Now, if there is insufficient supervision, this increases the risk that judgments were not challenged, management was not challenged, and audit evidence that we've obtained was not critically evaluated. So ultimately, inadequate supervision is going to undermine the quality of my work. So we're just explaining in a simple short sentence for 1 mark each why this is a problem, why the lack of review is a problem. Very frequently tested, inexperienced staff was assigned to complicated or complex accounting estimate audits. Now we're going to go on to explain that estimates include judgment, there's a risk of management bias, and therefore the junior staff members will not be able to challenge assumptions. You're likely to get a technical and a professional skill mark for talking about this. In another example, and this is now from the Code of Ethics, the audit firm provides tax services to the client where the fee is more than the audit fee. And in terms of impact on quality, there's fee dependence on other services. So there's a self-interest threat which could affect the quality of my work. And then you would use the Code of Ethics, of course, to talk about the safeguard. In another example, the partners, so the people really are going to be signing engagement reports, they are rewarded on recovery rates and chargeable hours and not quality related performance measures. So it's all about profit and earnings for them. It doesn't matter whether quality is compromised. And now the discussion is on the culture that you are prioritizing profitability over audit quality, which means across all engagements, there is a risk that work has not been done properly. In another example, the firm accepted a new client operating in a specialized sector although they did not have experience in this sector. So they could all be qualified accountants, but if you don't understand that sector, you won't understand laws, regulations, etc. And therefore, the quality of your work is going to be compromised. So because of this lack of industry knowledge, proper procedures would not have been performed, and very important, key risks in this particular sector or industry would have been ignored. Another example, this is now less frequently tested, but whenever this is tested, students normally struggle with this. We're very used to discussing new engagements. We are less comfortable with discussing continuing an existing client or continuing with an existing client. Now, the engagement partner during last year's audit, for example, had identified that management lacked integrity. There were allegations of fraud against management or senior management, and therefore we should have reassessed whether we want to continue with this client. And if this was not done, then the risk that I might have or might be giving an incorrect opinion is going to go up. Another example, the firm has not carried out internal quality inspections for 2 years, although in the prior years there were regulatory findings where concerns were found. So can I just quickly, in case, because I'm sure a lot of you don't work in audit, the idea is firms have their own regulators. So for example, in the UK, they could be regulated by ICAAW. And so the regulator is going to be carrying out their quality checks. And of course, there could be other regulators. I'm just talking about one example. But then the firms have their own reviews on completed engagements, or before the engagement report is signed, they could be carrying out reviews to see that the work quality has not been compromised. Now, this scenario says that a few years ago, the regulators had found that quality had been compromised. So after that, the firm should have carried out their own internal quality checks, but they weren't, which basically means the element, the way we spoke about monitoring, is not being done properly. So there could be weaknesses across different engagements and risks that I might have been signing incorrect reports, be it audit or for other engagements. A slightly different one. This is an engagement quality reviewer was, I don't know why, this says too many things. So an engagement quality reviewer was appointed without assessing competence, seniority, and relevant experience. This is an easy one. They're meant to be challenging the work that has been done or evaluating judgments. And if they do not have the relevant competence or authority, that challenge would not have been effective. Just to wrap up, essentially in AAA quality management questions, we're basically looking at whether the firm and the engagement had sufficient safeguards to deliver a good quality audit. So we've looked at the elements of quality management or the components of quality management, but we're basically evaluating whether everything has been applied properly. I always say to my students that in quality management questions, you start reading from the first sentence. You pick up whatever looks wrong. It could be an ethical issue. It could be a supervision issue. It could be maybe ISAs were not applied properly, and explain why it's a problem. For a 20-mark question, you would be expected to have 20 discussion points, not 20 issues, but 20 discussion points. We will look at a quality management question from a past exam in a separate video. That's a very interesting one on group audit for 20 marks, and that will help you understand how all of these concepts can be applied to a slightly difficult past exam question.